In late 2015, we had a 13% pullback into 2016, and that was the oil concerns that we saw. So it's been a long time. Look, we've talked about the inflation risk, the valuation risk that's out there, and the political risk. The odd thing about today was we didn't really have any headlines about any of those risks that we keep talking about.
Itself, right.
It was all technically driven. And when we saw buyers come in on the small upswings, there wasn't much volume. They weren't very enthusiastic. And when the selling, we saw sellers come in when we hit new lows on the day, the volume picked up dramatically. So what that tells you is the buyers were not very enthusiastic on the upswing. See the rally there early in the day? That was very, very light volume. That's a warning sign because the rally died very quickly because there weren't enough buyers. Then we hit new lows in the middle of the day that broke below the opening lows. Those are bad technical levels. Volume picked up. They tried to rally. There was no volume in the rally on the upside. And that's the point. I hate to keep saying more sellers than buyers, but this is a dramatic example of how that can be today.
And Mike, we should talk about what happened with the volatility of the market. So far this year, it had been picking up even when we were moving up. And remember, we moved up so strongly to start the year off. Now we're pulling back strongly, and everyone's wondering what's going on under the surface.
Yeah, the market really has had much more energy to it, to the upside and the downside, both ways since the first of the year. What started out as, I think, a pretty routine pullback from very overheated, very extended levels a week ago today really did snowball into something that was kind of mechanically haywire, especially this afternoon when you saw the volatility index go up so much, which shows you almost forced buying of options.
And here it is on our screen now. So when you see that volatility index, we're at a reading of 37. Let's put this in perspective for a second. We spent basically all of last year with that thing under 10.
Around
at some
10,
of the lowest levels that we've seen. It was complacent. It barely moved. And that's changed on a dime, hasn't it?
It has. So downside momentum in the markets is also a thing. So we had upside momentum that's been reversed. This seems like, though, really the mechanics of the market have taken on a life of their own, at least this afternoon. Just for some context, usually when we see the volatility index get to that level, other markets outside of stocks are doing something worrisome. They're showing some kind of stress or concern. The credit markets, the bond market, the currency market, not the case right now. So just as the economic news did not trigger this, it was not really a kind of a global macro scare. It was about the stock market after a little bit of a violent sell-off, kind of getting caught up in its own self.
And I think the key, too, is, and I agree with Mike, is the market. When the VIX doubles, that's extraordinary. It went from 17 to 35.
Right.
That's extraordinary. That tells you that market was not positioned for this at all, because what the VIX is measuring is essentially the price of buying put options. And as the market kept dropping, the prices of those put options kept going up and up, and the volatility went up, and that's what drove the VIX up. And the question now is, there are products that are out there that are tied to the VIX, ETF products, ETN products as well, and how they're going to behave in the near future.
Right.
So remember, we've created a whole little tiny ecosphere. There are people who've argued volatility should be an asset class. I personally have doubts about that.
There are many people who have piled into this trade. Many. I mean, this is one of the most popular places.
Think of it as a counterbalance with the equity market. As it was going up, the market was going down.
And these things, I think of it as the vital signs of the markets. They're a little bit off kilter right now. It's probably going to continue for a little while, a couple days.
I think the good thing is we've gone from overbought to oversold in a week and a half. I mean, we were saying, remember the market was rich, 18.5 times forward earnings. The multiple's ridiculous. Now, tonight, it's at 17.3. I mean, I won't say it's now a bargain, but it's definitely gotten more attractive.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.